Hello everyone, welcome to Bitcoin and Ethereum Elliott Wave analysis. It has been about 7 months since Bitcoin started correcting more aggressively. Let's jump and take a look at the price. I am your host, the Cowboy. This is Elliott Wave Cafe. Let's get started. All right, so welcome everybody. I haven't done a video for Bitcoin and Ethereum in about a month, so we're going to do these once a month now. And, things have definitely looked very interesting. We have tried to break through some important support levels. They've been holding so far, and the price action is still fairly depressed. We're basically hovering around the 30,000 level for quite a while now. On a stock market and equity market that's been also correcting. So this all it's coming amidst a tightening monetary condition from the Fed, increase in interest rates, and possible slowing economic growth. So what you're looking at here, I have a few slides that I want to take you over. We're looking at the price of Bitcoin on the monthly time frames, and as you can see in here, we continue to remain in a pretty decent uptrend. And this one shows you, it's coming from 2015, 2016, and it continues to move higher. Now, the definition of an uptrend is obviously, higher highs and higher lows. And as long as this pattern continues, we continue to assume that this uptrend is intact. Couple of levels that are very important for us to start to doubt the continuation of this uptrend will be obviously, this trend line that is somewhat subjective depending on kind of how you place it. Some people place it on a closing basis, and if you do that, we are right at the trend line right now. If you place it where you've had the major swing in price, where you've reached the lows, then there is still more room for this to develop. You can see in here, you also have the 50-month moving average, which is, roughly about a 200-week moving average, which right now rests anywhere between, let's say, 21.5 to 23,000, depending on kind of how you look at it on between the monthly and the weekly time frames. A very important swing low level is this 39.48, I think, that we've hit, or 35.48. I'm not sure exactly. I can't see that close. We had in the COVID lows right there, and then we started a big bullish advance. So for all intents and purposes, I think we continue to be in an uptrend in here. The price action, continues to look somewhat normal through Bitcoin cycles where you've had, corrections and impulses, and you're just kind of following the ebb and flow of the market. If you're looking at the candlestick patterns in here, they don't look, let's say, super encouraging at the moment because they're still, looking fairly negative with a couple of candles here that continue to look, on the dark side in here. And we'll be watching what happens into the month of May and to the month of June and maybe month of July, and see if we can start to stage somewhat of a bullish type reversal, either through some bullish engulfing or, through some kind of a candlestick formation that can show us that some major lows have been found. We haven't had that price confirmation yet, and that's kind of what I'm watching always on the monthly time frame. So I'm revisiting this every month at every month close, and I'm looking at kind of how the prices respond, how do they close, how do they react. And you can see that for the month of May in here, we've had a pretty decent sell-off, followed by a rejection of lower prices and a close above these spring swing lows, where the market kind of dropped towards 28.9. So we haven't really had a close below those levels, not on the weekly time frames, not on the monthly time frames, which is a good sign for the price right now. And the prices are very depressed. The sentiment out there on the crypto market, it's very low. I'll show you, some charts kind of going forward. But in terms of the trending of this market, this continues to look like a pretty healthy picture. right? And the prices move from the lower left to the upper right. And as long as this continues to be the case, I think, looking at Bitcoin from an optimistic perspective, I think it's warranted. So let's jump over to the next slide in here, and this basically takes a look at some weekly time frames. And I wanted to, this is a little bit more of a technical analysis. I'm going to get to the counts as well, but basically I wanted to show you what's going on when you do some trend line, very basic trend line analysis. Now I have some horizontal lines that are important as well. So what this one does in here, plots the low from June 2021. So this is when the markets had the first corrective sell-off, after the highs that we've had there. And those lows were 28,908. I think they were established in, I think 11 or I don't remember. I don't want to, 11 or 12 of June or something like that, 2021. I could be wrong. But nevertheless, and those lows were 28,908. Now, the market has not been able to close on the weekly basis below those levels. I'm looking at that as an encouraging sign. This is a very strong support. It has been tested, several times during the first decline that the markets went up higher. And now here we are coming back again and trying to see, who's still supporting the prices at this level. We briefly dipped below, almost towards 25.5 on the sell-off, but then we pulled back and we're trying to stabilize. So in terms of an horizontal type price action, these levels are still very strong and they continue to offer support. The next major level, in case we're going to get a close below these levels, it's likely that we're going to continue to travel towards 19,780, which is the highs from December 2017, when we first had the big impulse in Bitcoin. And there's not much support if you look at the horizontal prices between, these 29K and that 20K. So there's going to be a $9,000 drop if we're managing to close below and sustain a drop below those levels back towards 20,000. So it's to be expected. Now, if you're looking at the angled trend lines, this is basically just a very simple technical analysis tool that shows you that every time you're having a corrections, you're placing a trend line from the swing highs. As the market is making, let's say, lower highs in here, you're placing the trend line. The moment that trend line gets broken to the upside, you have a fair assumption to think that the prices are going to continue to push higher and that this trend is complete. Now, you're going to have some fails along the way, and that's possible. That's the nature of technical analysis. Nothing is perfect, nothing is 100%, right? And it's a matter of the decisions that you make when things don't pan out, right? That's what differentiates, let's say, stronger traders from weaker traders, traders that have been in the market for a while, that know when to kind of get out of positions if things don't go their way. So for example, in here, you've had a pretty good rally from the moment this trend line got broken in here, and it was a nice move that carried us north of 13,000 in Bitcoin. Then we've had the next correction, which looked pretty straightforward and pretty simple. You would have expected after this correction for the market to continue to push higher. We did broke the trend line, only to find ourselves into a big correction. Then the markets collapsed along with the COVID crisis, and we've gone back towards, 5,000 or whatever this low was in here, maybe 4,000, something like that. So, but then the markets recovered. You had the trend line from these highs to these, highs as well. And the moment you broke above that trend line, prices stabilized and you continue to begin the higher uptrend. Sometimes these trend lines are sharper, right? They look, they have their angle of decline. It's more aggressive. Sometimes they're not that aggressive, right? They're more, they're just kind of more relaxed. But it's important for the current price action that we have right now, that we're climbing back above this trend line, and that would going to be the first indication that this downtrend, that this corrective downtrend could be over. So anything that you're assuming right now from these lows, it's a fair assumption that you continue to believe, right, that these lows will hold, but you won't know for sure until this market starts to climb back above this this trend line in here. Until then, you're still in a lower high environment. Even more, until you're breaking above this $48,000 high, you're still going to be in somewhat of a downtrend into this market. So these are a couple of swing levels that are very important. Break above this trend line and break above the swing high in here. Sure, you can always fail and do one more low, just like what happened in here. You broke back above, you took out actually the swing high back from here, and then you collapsed again, right? But nobody knows for sure if that's going to be the case, what's going to happen. So you're going to go, with, at least personally, I'm going to go with the assumption that once I break above this trend line and once I break above this high, I'm going to expect new highs from this market and I'm going to expect a new uptrend. If that's not the case and the market falls apart, then I just have to get out of that position. If I'm going to be on a trending basis, or at least on a trading basis, or at least, pay attention, to that signal. So I wanted to draw attention to, because I think, a lot of times these trend lines are underused. These are two big indicators. They are largely underused along with the channeling technique, right? Those two very simple technical analysis tools, they don't get used enough. And it's important at every time frame that you're looking at. Obviously, the longer you go, the larger time frame you go, the less let's say noise you're going to get in price. So let's go to the next slide, and this one basically shows you on the candlestick patterns that we haven't closed below this level in there. Right, this is the swing low, and I placed a trend line, an horizontal line in here that shows that prices right back there, they're still above that level. Even with the weakness that we've been getting lately and where we are with the price at the current moment, right? We're still hovering above those, and markets quickly rush with any sell-off below those levels. They quickly rush to close below those levels because that's an important support line. Okay, so you have the 200-week moving average that's a little bit below at about 22,200 at the moment, continues to climb, and historically, just like you saw on the monthly, provides support. So if we're going to continue to drop, you might get a quick flush down again towards that 19,870 where the trend line is, where this high is, when the moving average is, and that's going to be the next big level of support, where you're probably going to get a lot of bids coming into the market if we're managing to break below here. Okay, now on a shorter basis here, not on a shorter term basis, on the moving average basis here, you can see that you are still below, right, the 50-week moving average. That's the one in red, and you're below the 10-week moving average as well. So these are important levels to be taken out for the market to begin a new uptrend in Bitcoin. So that's just another indication. Sometimes, what I do is I place trend lines and I watch where some of these moving averages, because that kind of gives you a little bit of a confluence of zones where you're going to find strong resistance. So all this is just pure basic technical analysis that, you learn over years, and you study books, and you're just, experience this in your own trading, I'm sure. And it's just, one of the simplest methods of analyzing the markets. Okay, so going next, I'm going to take you through some counts. Now, this is one of my main counts in here. It's the white count. I've been studying this one for a long time in here, placing a wave one cycle back here in the end of 2017, with a wave two at the COVID lows in here to a WXY, followed by another primary wave one back in there, and followed by a complex correction now in a wave two. I've had this for a while in an A, B, and then down in C, but the markets did not follow that count. You went up into a correction and you sold lower one more time. Okay, so that does not change the larger picture. All it means is that the initial thought that this market had a completed move into this decline was wrong, and that the next viable approach is right here on this chart, which continues to look at this as a correction against an impulse with a much larger trending price section to come. So one of the ways to count the second wave, it is in a WXY, or in an A, B, and then 1, 2, 3, maybe a fourth wave in progress with another quick drop in a wave C that could complete, let's say, a expanded flat scenario since this wave pushed above this high. Now, I'm not big into placing X waves to new highs due to the fact that I always consider those to be B waves, and you don't really find it in the literature as well. Usually X waves do not get to travel, but since this was just a brief break of the previous high, I think it's a fair assumption. I can go with it. I can accept it. If it would have been much higher, I would have been staying away from it all day long, right? I don't like B waves to be way above this wave A origin. So this fits the pattern of an ABC in here through a Y wave decline. And it fits the narrative of a possible termination into the C wave fairly soon. You can also notice the trend lines in here. So I'm going to watch for, based on the horizontal levels, based kind of where we are, that we could be very close to a completion of this decline, right? So, and I'm going to count this into this white count as a 1, 2, and then we're going to begin. And once we break that trend line, we break above that swing high, that's going to be the next third wave break into the upside. Now, one of the things that, I'm probably going to get some pushback on, and it's, it's totally fine, is the fact that the second wave, right, it's a little bit higher in here to this Y wave. And, people are going to ask, hey, why don't you place the second wave back in here? It's totally fine for that as well. I wanted to give this more room, right, as a larger second wave, because we're looking for this much larger trend to begin. So in terms of proportion, I want my second wave to be quite large. Now, if you want to put the second wave in here, it's fine. What that does though, it changes the placement of this wave 1. So you would probably go in a 1, 2, 3, 4, and 5. This wave 1 moves where the wave X is, and then you're in a wave 2 process at the moment that could take a little bit longer. So that's a variant of this count, where this wave 1 top goes back in here. This fourth wave, it's very, very small compared with the second, and that's one of the reasons why I'm choosing this approach versus the other. So, because if you go 1, 2, 3, 4, 5 for 1, again, this fourth wave, it's quite small and disproportionate. So, but I'll keep that in mind, and I have it in my counts as well as a kind of deep alternate on there. So this is kind of what I'm watching. The targets towards about 100% equality between this wave 1 and a wave 3 would be towards about $420,000 for the price of Bitcoin moving into the next 2-3 years. The next slide takes a look at the more, let's say, realistic count that looks at Bitcoin as a 1, 2, 3, 4, and then you begin the count from here for a larger fifth wave in a 1, 2, 3, 4, and 5. Now what this does is this basically limits the price of Bitcoin to stop below 100% for a fifth wave, which is near 400,000 as well, because this fifth wave cannot be longer than wave 3. It has to be shorter, since wave 3 is shorter than wave 1 under this circumstance. So this wave 5 has to be shorter than 3, which limits this move up here below 100%, which is 400,000, with more appropriate targets for a fifth wave towards 112,000, 107,000, where I have a cluster of zones, 5 plus 3 versus 1 and 5 V1. I'm referring to these waves in here. And also you have a 5v3 at about 63,000. So if this fifth wave wants to travel about 61% of this wave 1, that would stop at about 63,000. So that's the targets to the upside for a final fifth wave of this kind of larger cycle move in here. This wave 4 has pulled back very close to 38%. We haven't hit that yet. That's at about 22,000 on the log scale. It's very important that the log scale is on for a 4v3 on a 38% pullback. If you connect wave 1 top with wave 3 top, that gives you a fourth wave target projected from the second wave low. And we are near those levels at the moment. We are above the wave 1 high, which is 13,826, because that's where this fourth wave, that's where this count will become invalid. It will not be appropriate anymore, and you would have to kind of go back to a second wave type scenario, because this one allows the second wave to go much deeper without becoming invalid. So if this wave it's to work, if this count is to work out, we should be near the ending stages of this count, and we should be moving higher fairly soon. Okay, I'm talking if there's another decline coming back towards 25,000, maybe towards 22, if it really wants to get a flush lower like that, that's fine. But we gotta finish this off fairly soon. And I'm watching in here also in terms of a time fib, 1618 in here for the fourth wave compared with this wave second. This is an important zone. It's one of the kind of the most watched time fib zones for the fourth wave. And if you wanted to take a look, this is one of my most watched videos on YouTube. It's got upwards of about 70,000 views. 70,000 views on the trading view about how to project wave 4 by using the time fib tool on the trading view versus wave 2, and that shows you those levels, how they get projected. So I'm watching this one fairly close. All I'm watching in here is for maybe one more push lower in this wave C of a WXY. So we're looking at an A, B, and then down in C. So there might be one more push lower. Maybe you were over, but we'll continue to keep an eye on that. So the next slide takes a look at Bitcoin on a much longer time frame in terms of a correction, right? So I think a lot of the bears in the Bitcoin community, or anti-Bitcoin, or whatever. I don't want to get into any of these discussions like how much correction we're going to have, or if we're going to a much longer winter in Bitcoin, or if this network won't survive, or whatever fundamentally happens with this network. But if you are super bearish on the price action and you're thinking that we're going to go into a much larger correction, this is kind of how this would unfold. A wave 1 top super cycle was already found, and for the next, let's say 5-6 years maybe, you're going to go into a much larger decline in Bitcoin. Here you're looking 2025, possibly 2026. Okay, 4 or 5 years. And this would start just like it did right now through a 1, 2, 3, 4, and 5. So these are all just assumptions, projections, right? Just kind of let your imagination run wild about what could happen to the price of Bitcoin if this was a major top and you're looking for a much larger, let's say, super cycle wave 2, right? That could take 4 or 5 years to unfold. And you would have to start impulsively, and you would go to a 1, 2, 3, 4, and 5, right? Maybe back towards, $15,000 to $12,000 level. I'm just looking at proportionality here. This wave 3 is still in progress, and you're still kind of selling off in here. Then you're going to get a B wave rally. So this is the simplest form of a correction, which is a zigzag, looking at a 5-wave decline followed by a 3-wave rally, and then another 5-wave decline. So this can always morph, right? It could become more of a complex move, or it can become a flat, right? But this is just a basic scenario where proportionally the second wave would be much, much larger when you're looking at price action of Bitcoin, let's say from 2009 to 2022, and then lower from there. So just something to kind of run through your imagination. This would probably take Bitcoin all the way back to 5,000, 8,000, somewhere up into that neighborhood as you're kind of pulling back. You can go as low as prior this fourth wave in here, at about $3,000 to $4,000. So we'll see if this is the case. I'm going to keep this one just for kicks and giggles. I'm going to put it there, and we're going to revisit this one every month and see kind of how it looks. But for right now, from these highs to these lows, we only have a 3-wave move, and that's the most important thing that you can kind of take away right now. That for Bitcoin to continue to begin a much larger decline, this move from these highs to these lows has to be impulsive, and so far you only have a clear 3-wave decline. The next slide that I want to show you in here, it's the slide that looks at Bitcoin versus the dollar index. I've showed this one several times through my daily presentations and, in some of the webinars that we do every Thursday for the members in the Pro Room, where we're looking at the relationship between the dollar index and Bitcoin, and the shaded areas in here show you periods of dollar strength and how Bitcoin reacting during those periods. You could see that the level of performance in Bitcoin was fairly reduced, and the moment that the dollar found important tops and it started to sell off, which usually does aggressively once a decent top is found, Bitcoin really performed pretty well. So here is something that happened 2017 to 2018. Bitcoin started to accelerate much higher. It was a period of just kind of, bad price action in here with the dollar rallying. Bitcoin didn't do much. As the dollar sold off, you began the new, stronger advance. Just when the dollar was finding lows, Bitcoin was finding a top in here. And now that the dollar seemed to might have found a pretty important top in here, maybe there's one more push higher. We're going to take a look at that. Just one more push higher in the dollar, and then maybe one more push lower in Bitcoin. Maybe that's the exhaustion signal that we're going to get. But there is a very high chance that the dollar has already found the top in here, and then we could be already on the way down in the dollar index, which means that there is not long before Bitcoin starts to perform well and push to the upside. So the signs in the dollar here, if you look at the weekly time frames, monthly time frames, are starting to suggest that we could be entering. There is also a seasonality aspect into what's going on in the dollar. So it's just multiple indicators that I'm watching in there, saying that this levels in here could be already a top in the US dollar. So that's a very important indicator, I think, for the further price in Bitcoin. So pay attention to that one as well. I'm looking also at the copper versus Bitcoin. I've been watching this for at least a year now, if not more than that. I've been talking about this forever, and it's a highly correlated market. Copper is a risk asset. If it moves higher, that means that you're going to get risk assets to continue to push, right? It calls for, let's say global economic growth and relaxation and just, increase in risk appetite, right? And that's a pretty good indicator. Copper has been, rallying here since 4.1. Now we're at about 447. This looks like a three-wave decline. We are above the swing high, almost right there. So if we manage to continue to squeeze higher and we take this 4.8, it's likely that copper will continue to break to the upside. So that's kind of what I'm watching. Bitcoin has not followed through just yet as strongly. There was another period in here where copper climbed and Bitcoin was still stable. Then Bitcoin did a pretty good rally. Then copper stabilized, and then they both kind of sold off together. So based on this, I'm expecting Bitcoin to start to push here towards 36,000 to kind of follow copper price action. We also have a big gap on the futures market that's supposed to be closed. So, if you're super bearish in here, it's important that you pay attention to what's going on at some of this intermarket analysis in here. So copper gave us an early signal in here. There's something happening, in terms of risk and risk appetite in the markets. And we've been getting pretty decent reactions into the S&P 500 as well. That looks from the highs to the lows. And I do videos on this on YouTube almost every single day. And I talk about the price in the S&P 500, where we're looking at this as a three-wave setback at the moment, and we're continuing to expect a pretty good rally upwards after this impulse. Right here we have a little bit of an impulse, maybe a 5-wave is done, a little bit of a pullback in possibly a B wave or a 2, and then a C or a 3 upwards. That's probably going to target these highs or maybe a little bit lower, and then we'll see what happens, if we're going to continue to push to new highs or if that's going to be a resistance. So we're going to be watching Bitcoin to kind of follow that advance along as well. So This is just a little bit of an intermarket analysis with some of these other risk assets. The next chart that I have is the Crypto Fear and Greed Index. You're very familiar with this one, I'm sure, if you're watching Bitcoin price all the time. And we've been in a very depressed zone for quite a while right now. It's getting quite long. It's one of the largest that we've had, sitting at anywhere between 11 and 14 in the Fear and Greed Index. I'm not sure how much longer these levels can actually be sustained without first getting a little bit of a rally and relaxation in price. Sure, you can continue to go lower, but it would happen after a relaxation of this fear and greed index, right? When the sentiment gets extreme to one side and it stays extreme like that, you're going to get sharp rallies into the other direction. So you can look at the cluster of zones that you've had, around March 2020, obviously at the pandemic low, and we've been sitting there for a while. Then you've had at the tops in kind of May and June in here, and then followed by rallies. So the fact that we are sitting at this lows here, it's another, confirmation that another indication that the rallies are probably going to be very sharp and not long before they happen. So I would definitely continue to keep an eye on this and study it every day and see kind of how it performs. But in terms of sentiment indicators, I don't know, like in the stock market, there's a lot more things that I can watch. I'm trying to combine VIX with Bitcoin as well, which is the fear gauge in the S&P 500, and there is a lot of breadth indicators and a lot of new highs versus new low, advances versus declines. So there is a lot more breadth indicators that you can follow that can give you a stronger positioning and just a stronger conviction in rallies and sell-offs in the market. In Bitcoin, we don't have that many, right? You can watch a little bit, kind of what's going on in the altcoin world, but truthfully, unless you're really studying what's going on chain, maybe, that's where you can find a lot more of this indication. I watch Glassnode every once in a while. I have an account there, and I'm kind of going through some of that stuff, but it's not my strength. I'm tending to watch price and sentiment based on, some of these other indicators. So, let's go to the next slide. In here, I wanted to show you just some of the things that we've done with price into the program as well. So we're trading basically actively every single day, and I have a trade alerts channel in there, and Bitcoin is not the only thing that I trade. I trade oil, I trade gold, we trade the S&P 500, sometimes options, different things, and I post most of the trades that I take. Especially on the crypto side, I post them into this channel, and I give alerts to my members, kind of how this happens. So May 27th, trade alert, opening long position, 29,350. So this was right back in here after we've had a pretty decent failure through Bitcoin price trying to break lower. That hasn't happened, and then you had a quick rejection upwards that gave me confidence, and it wasn't necessarily a strong Elliott Wave setup, but just a just a sentiment indication along with the equities that we're probably going to get into some kind of a short squeeze, maybe short-lived, maybe not at the time, into the price of Bitcoin as well. So we opened a position. I alerted my member, I think I want to get involved at about 29,350. We had stops below 28K. Those were never hit. And then we followed through on May 29. If we break above, we're going to move the stops to 28,500 from 28, further reduce risk. Then on May 30th, we moved stops to 29. Then we took profits not long after, I think on May 30th, 50% profits at about 31,775. So very, very close to these highs. I wanted to take about half of the table just due to the fact that obviously this could always be just a simple ABC, right? And you wanted to make sure that you're protecting and you're taking profits based on that. If it turns into something larger, then you continue to join the uptrend. If it doesn't, then, at least you have a big chunk of the profits taken off the table. We raised stops again on May 31st with the 30K. This trade was risk-free, and we locked profits on that 50% balance. And then as the price did not continue higher, but rather push lower. We got stopped out at 30,000 for another 2.15% profits on the rest of the position. So a very decent trade, a very nice trade in here we took advantage of. And here is another one that I just opened on June 2nd. So I think it was on Thursday. As the markets were selling lower in here, and with some of the, again, combining with some of the sentiment from the equities as well, I decided to open another long position in here. This one it's a little bit more risky. It's not really follows my process, tick for tick in here. I open it, at about 30,045, and I'm going to drop if we break below this 28,000. So I'm looking, because everybody's so bearish on this ABC or WXY setback, that I'm willing to risk some money to find out if this pattern is correct, and not, for example, a larger impulse higher, which not that many people expect from this support back in here. So I know exactly where my risk is at about 28,000. I know exactly that if I'm dropping below those levels, I don't want to be involved, because that's going to confirm that this move here, ABC, it was a three-wave setback, and you're probably going to break low. So this is kind of how I read the price action, and kind of how I talk to my members every day through the Bitcoin videos, and I explain my thought process behind what I do and kind of what I watch in here. So, that's just part of the pro service, and, with the monthly subscription, you get access to this. Besides, we have an altcoin channel as well that I just opened, where I only discuss altcoins, and I do daily videos on those. And then, we also take a look at futures, S&P 500, all the rest of the stuff that I watch in the macro channel as well, because I think it's important. I think to become financially savvy, how should I say this? An understanding of the global markets is important, because it's just going to make you into a stronger trader and a stronger, it's going to provide you with better tools for analyzing markets and sentiment. Okay, when you look at all the markets, not just at crypto or at forex, or somewhere in between. So that's just my suggestion. So anyway, let's go and take a look at the next slide in here really quickly. I want to plug this because I'm trying to get more subscribers on this one. I think it's a free newsletter. I'm going to write it every week, and maybe even more often. But it's basically my attempt at, talking about sentiment and price and different markets, and trying to explain them and put some charts out there, and just have some written thoughts about what's going on and what the market's conditions are. And some people might find it more interesting than necessarily listening to my videos. You can find this at Elliott Wave Cafe, Substack.com. I think I have 4 or 5 articles so far. I haven't written the one for this week yet. I'm probably going to do it tonight or tomorrow and put it up there. But go ahead and subscribe. It's it's free. It's going to come in your mailbox when this is ready. So give it a look and see. Let me know what you think. You can comment on it as well. All right, the next slide, we're going to take a look at Ethereum, because Ethereum, it's got an interesting formation, and I'm gonna take a look at Ethereum and also at Total Tree, because they're very, very similar, these counts. I mean, these charts, right? Ethereum, it's a pretty good proxy for alts, even though you could say that a bunch of the alts have sold lower, way more than Ethereum did so far. Now Ethereum did get a little bit of a pullback. It looks very similar to the price action in Bitcoin, but what it didn't do, it didn't break convincingly below this decline in here, below this W or below this A wave. You can notice I put a little chart on here because I still think that this is possibly still a triangle. It could be. We haven't violated the A wave, A low, and it could still go into an AB with a deep C wave, right? And we could still do a D and an E, or a fourth followed by a fifth A higher. So I still have to consider this count, because in Bitcoin it got dismissed, but in Ethereum it's still valid. So I'm watching this as an alternate, followed by, having the primary back in here in a 1, 2, 3, and just like in Bitcoin in a WX, ABC into the 23%, pullback followed by a fifth wave higher towards, let's say first targets maybe, 55 to 5800 in Ethereum, and then a much higher target depending on kind of where this finishes off, where this fourth wave finishes off towards maybe 10 to 14,000. But because it's a slide, I have no way to adjust this fourth wave, so I don't know exactly what it's placed, but I think it's placed somewhere just below these levels. So and also watch the time frame in here as well, right? The 1618, it's coming fairly close for a fourth wave in Ethereum. So there might be, just a little bit more weakness in here. But again, if you look from the move from the highs to the lows, this is a three-wave decline. Three-wave declines are moves against the primary trend, and it usually tells you that this market is going to travel through new highs. Now, if this market makes five-wave declines, that's a different story. Then you have a lot more reason to believe that the Ethereum will continue to correct, and you're probably going to be followed by a B wave and a C wave decline. So the only way this can be a five-wave decline if it is part of a flat, which would make us count this as an A, B, and then down in C if it becomes a five-wave move. Okay, but the nature of Elliott Wave is very fluid, and it's a beautiful tool. I've been using it for a long time, and it's the one that gives me the most confidence in my abilities to read the market price action, along with some of the technical tools that I've showed you previously, between moving averages and trend line, and sentiment is a big part of understanding markets. But it's an evidence-based approach, Elliott Wave. Things can happen. You expect them to happen, and they don't happen, and then you have to adjust your thinking about the market. It doesn't mean that the tool is flawed. It's just that the markets are very fluid, and they continue to follow their own. I mean, there's millions of people trading these markets, right? And all we got to do is just know when things don't pan out, where is our risk, and what are we looking for something to get confirmed or to get dismissed. And I think that that's a super powerful tool to have and to get better at. I'm probably not explaining it the right way right now. I probably have to, think about this a little bit more to kind of come up with the best explanation on kind of why I love Elliott Wave so much. But, I've been using it, and I know that it gives me, such a, clearer, understanding of price behavior in the markets, if I can say that. So I know waters can get muddy sometimes, and that's the time to step aside and just say, listen, I cannot make sense of it, so I'm just going to let the market show me, and that's perfectly fine. It's one of the things that as eliticians sometimes we get put into this box that no, you have to count every single thing that's on the chart, and you don't have to. Sometimes when things are messy and they don't look as clean, then you just put your best interpretation forward, and you just let the market decide. So anyway, this is an Ethereum, and it's a it's a fairly similar picture with what's going on into the crypto total market cap here, right? You're looking at total 3, and this is the altcoin market. I mean, we just have to watch this 841 billion. Right now, we're half that because this market kind of got cut in half. You're at about 426 billion. We are sitting at a very important support, just like we're doing in Bitcoin. So a lot of these markets are showing you that there is support here. And if you break below this support, it's likely that you might get some deeper sell-offs, but it's probably going to get encouraging the moment that happens, because that you're going to be flushing a lot of fear out of the market. You will just get kind of completely just obliterated, I would say, right? There's a lot of the traders that still believe that this thing, it's worth it, or that they hang by the support. And then the moment this kind of gives way, we're like, oh my goodness, I'm done with this. And then that's the moment then the markets, start to find a low. And then from there, we can actually rally. So is that point right here, or is that point a little bit lower? I'm not sure. But I know that, this is running its course. And, in my view, I think we're closer to the end than to the beginning of a of a larger decline in crypto markets. Okay, so I'm going to close it off with that. I hope this makes sense. So this is again, it's a very similar account with the Ethereum market and the Bitcoin market. So just a 3-wave setback so far in here. This could be a very sharp C wave, maybe one more push lower, and then we can go ahead and rally, or this could become a 5-wave decline, and then something else is at hand. But I hope this was helpful. And guys, don't forget to subscribe and like if you enjoyed this. And I'll see you in about a month. In talking about Bitcoin and Ethereum, I suggest, give us a try. Come into the pro room where I do these videos every single day for Bitcoin, Ethereum, and a lot of the alts, also macro. So that's the best way to kind of, familiarize yourself with my style and kind of how we watch the markets and all of that. And then, you can visit me in the public room as well if you want to show me charts, and, you can talk different markets in there, or on Twitter. I'm pretty active there as well at Elliott Cafe. So, thank you for watching. All right. See you later. Bye-bye.